just get a sip of my coffee before we begin. Oh, that's good stuff. All right, video number 2. Hello, everyone. I was giving it some thought yesterday as to what I am going to make the second video on my channel about, and I thought I'd start at the beginning. So let me just drag this over here. What are you going to need to begin your trading Forex and your trading journey? This is what I think you'll need in order to get started. And the first point on this particular document is only if you don't understand anything about the markets like I did when I first started. When I first started, I didn't know what a pip was. I didn't know how to place a trade. I didn't even know how to read a chart. And I found out the hard way what spread was. I wish I had done the full course before I jumped into trading. I got very, very impatient. Anyway, so let's start at the top. Understanding the markets, tools, and processes to trade them. Guys, if you don't know anything about Forex, go and do a course. It doesn't necessarily have to be a paid course. I did my courses via Udemy, and I'll actually show you which courses I did, just so that you have an example. This was the first course I did when I had no idea about what was happening in the markets. Zero idea. Now, I will link this guy's YouTube channel. So initially, I found this particular gentleman on YouTube. Let me open that for you quickly. I believe this is the video I watched that got me so interested or pushed me to the point where I was willing to actually dive in and actually begin trading Forex. So you'll notice this video is 4 hours long. This 4 hours doesn't contain all the information you need. You'll notice right at the end of the video, I believe, here it is, right at the end of the video, he says you can get my full 8.5 hour course by clicking the link in the description. Now, the link in the description is slightly different to the one I used. This is rebrand.ly. I don't know what rebrand.ly is. I clicked on it yesterday and it didn't open anything. Let's have a look if it opens anything today. Oh, there we go. Oh, straight into Udemy. Perfect. So this is the course that I purchased when I first began. And when I was finished with this course, I was confident enough to jump into the markets on a demo account. And following his guidelines and his advice, I actually made profit on a demo account. More coffee. Yeah. So buy a course or do a free course. I have a few other channels here. They are channels that I watch on a regular basis, and they both contain beginner's guide to Forex. Essentially training courses, and they are obviously free. These top two, I'll put everything in the link of in the description, all these links, so that you can access them quickly. Now, once you have an understanding of the market, you're going to need to find a broker. Now, all of these guys are going to explain to you how to choose the best broker available for you. So I live in South Africa, so it's best for me to get a South African broker because it's easier to withdraw money from a South African broker. So I use IFX in South Africa, and I use Owanda, which is abroad. But choosing a broker is really important, because if you choose the incorrect broker, the broker might not be regulated, the broker might be trading against you, the broker doesn't have your best interest at heart. And you need to find a broker with a very good reputation. Owanda is one of those brokers. Owanda is not a regulated broker, yet they have a very, very solid reputation in the market. And that's why I chose to go with them. My trainer also used Owanda, and that is the reason why I chose Owanda as my first broker when entering into trading. The next thing you're going to need are you're going to need the tools to exit and enter trades, and tools to perform analysis on. So to enter and exit trades, I use Metatrader 4. Now, let me show you what my Metatrader 4 looks like. This is my Owanda Metatrader 4. I downloaded it directly from my broker. A lot of brokers have their own downloads for Metatrader. And I'm going to just bring my screen over here. And this is my Owanda-based Metatrader. I've got my demo account here. I've got 2 main accounts over there. Let me actually just close that. That's fine. Right. This is where you're going to be putting in your trades. You're going to be entering and exiting positions through Metatrader 4. It's a very old application. You can just see that it's an old application. But the reason why it's so popular even today is because it works. It works really, really well. So you're going to need Metatrader 4. It is free. So you'll get that from your broker. Secondly, you're going to need something to do your analysis on. Metatrader is not that user-friendly. It's an old application. However, if you have TradingView, which is a website that offers this particular charting software, TradingView, it's 100% free. You can register with TradingView and you can begin doing all your analysis on TradingView. This is actually a trade I got into yesterday morning. As you can see, I was stopped out because I was impatient. Let me show you what I should have been waiting for. I'm getting off topic, but I thought I'd just quickly show you. I'm looking for the stochastic. What I was waiting for, or what I should have waited for, was the stochastic to come down. You see, I took the trade when the stochastic was right at the top because I thought, oh, okay, it looks like the market's just opened. It's got a good rally up. It's just going to continue up until it reaches this resistance. I was wrong, as I often am. I should have waited for the stochastic to come down and cross back over the 20 level. Now, if you have a look here, cross over the 20 level. If I had put my trade in there and my stop loss anywhere here, I would have actually got a much better trade. This would have been a 2-to-1 risk to reward. If I had put the trade in where I should have put it in, I was just so sleepy. I shouldn't have actually taken this trade. If I put it in over here, let's just call the stop loss over there, I would have got, with a fairly large stop loss, I would have actually got 2.3, no problem. It would have gone straight up within an hour and hit my my take profit. Anyway, enough about that. Let me just remove that. This is going to be your application or your tool that you're going to do all your technical analysis on. It contains many, many different tools that you can use to draw trend lines, to mark up support and resistance, to mark up zones which you need to you pay attention to. It's, this is the most user-friendly application out there, and you're going to need it. It's free. You do get a paid-for version. I believe I have the Pro version. The only reason I got this Pro version, the only reason is for the replay utility, so I can backtest. Apart from that, everything else is you'll be fine with the free version. You'll be just fine with the free version. Anyway, let's move on. There we go. You're going to need supporting tools and resources like Forex Calculators, news alert channels, and a trading journal. Let me show you what I mean. In order to put in a trade, let's say I wanted to put in a trade. I think it's going to go down, for instance. I put the trade in here and I say, okay, my stop loss is going to be just above this last swing high, and I'm going to go for it. Let's call it a 2-to-1. There we go, 2-to-1. Now, you can see here that my stop loss is 11 pips. But how do I calculate how many lots I can buy with my current account value? Because you're going to have to choose how many lots to buy. And the best way to do that is to use a Forex calculator. Now, I've got one over here. Again, all of these links will be in the description. This is USD JPY, as you see up here. This is USD JPY. This is USD JPY. My currency is in USD. You'll need to just choose whatever currency you have here. USD is most popular. My account size. So my baby account is $300. It's actually $320. And then you need to choose how much you want to risk. Let's just say 1%. This is an 11 pip stop loss. So let's go ahead and enter 11 pips. And the trade size in lots is 1. So I calculate. It tells me that when I go to Metatrader, I can buy 0.3 lots, enter in my take profit, my stop loss, and if this price comes up and hits my stop loss, I will only lose $3.2. So position size calculator, very important in Forex, very, very important in Forex. I'll put the link below. What comes next? Let's have a look. Oh, yes, news. So obviously these are the currency markets. There's going to be news that affects the currency markets in dramatic ways in very short periods of time. And these news events can be categorized from yellow, which is a minor news event. You get your orange, which could potentially have an impact on the market for this particular currency. And then let's just go tomorrow. There we go. The ones you really want to be paying attention to are these red ones. So tomorrow at 5:30 my time, South African time. Is it 5:30? Yeah, it is. AUD, which is the Australian dollar, has got 2 events marked as red, which means that as a beginner, I'm going to stay away from this currency at that time because it could fluctuate. It could skyrocket and then just suddenly drop. And I don't want to play in a market that is that volatile. And before you put in any trade, you come and you check. Right, I want to put in a trade in USD JPY. Come down here and check, is the US or JPY at risk of any fundamental news causing it to just go wild? And I can't see anything here that would have a major impact on those currencies. So I know it's safe to put in my trade without external factors influencing the price, either in my direction or the opposite direction. So Forex Calculator, very good. News, very important to see the news. Now, if you get confused with the times that markets open in your country, you can use a Forex time zone converter. So let me just open it here. I have no idea why it's taking this long, but it's a good opportunity for some coffee. Oh man, this is really taking long. Oh, there we go. Okay, cool. So this is the time zone converter. And down here, I've selected my time zone. So South Africa, Johannesburg, that's the time zone used in South Africa. I think it's GMT +2. Anyway, and right down here, it will show me which markets are currently open in green, when they opened, and when they are closing. So London starts at 10 a.m. in South Africa, ends at 6 p.m. New York and the States opens at 3 p.m., closes at 11. Sydney 11 to 7, and Tokyo from 1 to 9. So as you can see, if I go right from the top, it starts at 9 a.m., it ends at 9 a.m. That's what makes the market a 24-hour market. Granted, these, I would say, Sydney, Australia, and Asia, Tokyo. Very little action going on during these particular times, so the market is not as liquid as it is during the London session and the New York session. So I don't trade Sydney and Tokyo much. I did last night because I just wanted to put in a trade before I went to bed. Bad call from me. I shouldn't have put a trade in while I was tired, and I shouldn't have forced that trade. I should have waited if I wanted a good entry, or should have gone to bed. Anyway, let's move on. This is not so much what you need, but what you don't need. You don't need any money to begin trading. No, you don't need any. Zero. So I wish I understood this concept a lot better when I first started, because yes, I did start on a demo account, but at the same time I created my demo accounts, I actually funded my first account. And I wish I didn't. I'm not talking so much about the funded account. I wish I started my trading journey sooner, just on a demo account. What I did was I put off trading. So I took in theory, until I had enough money to open my own funded account, my live account. And then I went and traded with demo anyway. So if you want to begin now and you don't feel ready and you think you're going to be ready and you're going to have all the theory you need in order to begin in 2 months or 3 months or 6 months or whatever it might be, just start now. You can apply concepts, you can train yourself, you can get used to working in the markets before you even have money. So just keep that in mind. I wish I started sooner, just with demo. If you can't make money on a demo account, it's going to be unlikely you're going to make money on a live account. So what's the point? Anyway, let's move on. Back testing. Yeah. Oh man. When I first started, I would go on YouTube. I would watch a video on a strategy. Yes, I mean, the strategies work. I've tested a lot of them over time. They work, but not as well as they claim the strategies work from time to time. And each person implements a strategy differently. Anyway, backtesting is so important, because I don't care if a guru or a market master or somebody who's been in the trading field for 30 years tells me his trading strategy is going to work. I don't know that individual. I don't know if they're talking shit online. I don't know if they can't back up what they're saying. I don't know if they just threw together something that theoretically should work and it's garbage in the market. You have no idea. Do not trust anyone online. What you do, if you think somebody's giving you good information online, for God's sake, go and test it, because the only person you're going to trust in this game is yourself. If you are confident knowing that a strategy is going to work, then you're going to be feeling confident implementing that strategy. Even if a market master tells you, implement the strategy, it's going to work like a bomb, and you haven't tested it, I promise you're not going to be confident. So this is why I got the pro version of TradingView. It gives you this replay button. So let me just show you how it works. Let's say I want to check a year's worth of price data. It's not going to do it on 5 minutes, but let's go to the hourly chart. Okay, so click on a year, and now it's showing me an entire year of price data. So what I can do is I can use the replay tool, and I can select a date. As you can see here, I select the 23rd of March 2021. It takes me to that time. Let me just find the chart. Here it is. So this is what the market looked like on this day, the 22nd of March 2021. Now, let's say I wanted to test the strategy. I can actually play this market forward as if it were live. Or you can just move it one bar at a time. And now you can look for your setups. And once you've found your setups that match the setups that the strategy teaches you, you can actually put in or just ghost trade this. So just let's say we think this is going up just for instance, I don't think I have no idea where this is going right now. Probably up because it looks like a bit of an uptrend, but this takes confidence away from me here. Anyway, so now I can play this out. Am I going to win this trade? So it's going up, it's won. Okay, so this is a good trade, and then you can go and mark it down on a piece of paper or on a document that you've created, and you can test a strategy. Going back a year, sometimes even going back more than a year. And remember, this is just one currency. You can go and test it on 5 currencies. You do 100 demo trades on 5 different currency pairs for a particular strategy. Holy shit, you are going to be so confident with that strategy afterwards, because you know that if you get 7 losses in a row, 8 losses in a row, 9 losses in a row, it doesn't matter. Those 10 wins in a row will be coming your way eventually, given a large sample size. So very important to backtest, guys. Please, please, for the love of God, backtest your trading strategies. Next, you need some time. As you know, I have a full-time job. I'm on night shift at the moment, so I do my trading during the course of the day. You need time. You need time in order to learn and understand the concepts of trading. You need time to backtest. Backtesting takes a lot of time. And of course, you need time to do your analysis. Being a newer trader myself, I've only been in the game for 2 years. I take a little bit more time doing analysis than somebody who would be in the markets for 10 years. So you do need time. Just be careful to just ensure that the time doesn't cut into your own like personal family time and things like that. When I first started, I was either working or I was trading, and my fiance did not enjoy that. So I had to cut the time down, and when I cut the time down, I found that I was a lot more focused, and I could actually move forward and trade a little bit more effectively. But you are going to need time to learn, you're going to need time to test, and you're going to need time to trade. So do it. Find a time that suits you and those around you. Okay, last one. You need a bloody support structure. Trading is a lonely game, people. There are few people around you, or in my case, around me, that are interested in trading or even want to talk trading. They're simply not interested. And to force trading, or to force somebody to kind of learn the concepts of trading so you can discuss trading with them, that's difficult, because you're essentially forcing trading on other individuals. But you do need a support structure, just keep your motivation up, to give you ideas to learn from. It's just really good having a support structure. And the best support structure you can find are Discord groups. So let me just show you over here. This is a Discord group called Perfect Entry. As you can see, they have chat rooms for everything. Yes, these people sell. They sell indicators. You don't need to buy them to be part of this. You don't need to pay any money to be part of this particular Perfect Entry Discord. But have a look here. Let's go right down to the bottom. I've clicked on Forex, and these are traders currently active in the market. People are giving you all sorts of information. Here's a guy here giving a time and date in India, tells you when the markets open, when they close. So that's just some good information over there. And then you get people who give you their trading ideas. Or in this case, this individual looks like he's asking for advice on this particular move. You see, there we go. What is this? Indecisiveness. I like that. Anyway, getting involved in one of these Discord groups is great. It really, really, really helped me a lot. I found myself chatting to people about all sorts of different things. And I felt that my knowledge grew when I started, my trading became more consistent when I started interacting with people in Discord. Again, as I said earlier, don't trust anyone. When somebody posts a let's find something. Let's see if we can find something. Okay, I'm not finding anything right now, but a lot of this guy's very active in this particular group, and he knows his stuff, but he has a very particular way of trading, which I don't quite get just yet. Anyway, so he does this, for instance. He posts, I don't know why the image is, there we go. He posts an image like this. Please don't worry too much about all of this, but these are basically the trades he claims to have made. Remember, just because you can draw an open and closed position tool and an order tool on TradingView doesn't mean he made these trades, doesn't mean he was successful. I can go and draw up, you know, in hindsight, when you've got a chart in front of you and you've got back data and forward data, you win every trade you make. So don't believe everything you see or you hear on these particular channels. Take everything with a grain of salt, and you will get some value. One last disclaimer about these Discord channels. They are absolutely packed with spammers and scammers. I'll trade for you if you give me your login details. You give me this much money, I'll double it for you. Try this indicator, and then you try the indicator and it's actually a virus and he steals all your shit. Don't interact with people personally on this platform. Just don't. See, so here this guy, for instance, was having a chat to me, and I kind of just cut it off. You know, I didn't want to get into any personal details. Let's have a look. This is a fellow South African trader that I met on Discord. We had a nice chat, and I gave him some basically a trade that I took. This was probably one of the best trades I ever took. But anyway, yeah, and we had a chat. But the thing is, don't click on their links. Don't trust what they say. These are people you don't know. They can be as kind and as helpful as can be. Just don't trust them. Like, most scammers are really helpful. They sound and they feel like good people, but they're really not. Anyway, that's it. Let me get rid of Discord. I think that's it for this video. I'm going to upload the video now. I'm going to include the link for these trading courses in the description. I'm also going to include the link for TradingView, for the position size calculator, and for the Forex market hours here and the Forex market news. I'll include all of that in the description if you need it. Thank you very much for watching the video. If you have any questions, just feel free to pop me a message. I'll get back to you. And if you feel that I've left anything out, or you feel that there's any improvement that I can make, you know, that will make my videos a little bit more palatable, let me know. Constructive criticism is a good thing. All right. Bye. Bells. I forgot something. I forgot something. And the thing that I forgot is one of the most important things out there. It's a trading journal, people. You need a trading journal. Basically, the importance of a trading journal can't be understated. If you have a trading journal, you can go back and have a look at your historical trades after you gain more knowledge, after you become more comfortable in the market. You can check out your historical trades, and you can see where you went wrong. You can see the mistakes you were making before. You can also see when you're doing things correctly. It will give you confidence, and it will allow you to slowly eliminate mistakes one by one until your hit percentage, or your I think they call it a batting ratio, how many wins versus how many losses, your wins are going to start creeping up. And in the Forex game, even if you get a 50% win rate on your trades, you're going to be making profit if you are managing your risk properly and you're implementing proper risk to reward. So a trading journal is very important. I will show you an example of one of mine. Let me just drag it over to this monitor here so you can see it. Here we go. It is a trading journal. So basically what I've got here is I put the date of the trade. I put my account size in. I say whether I took a long position or a short position. I'll tell you why this is important soon. And then my profit and loss. So you can see I took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades here, and I lost 3 of them. I lost $6.80, $6.58, and one of them I lost $8. And my winning trades here was $12, $9, $7, 4, 8, 2 and 2. I exited these trades very early. As you can see, it'll automatically work out my percentage. And let me just exit that. And you can see here that I made a profit of 0.83% of my account. Here I made a loss of 2.5% and here a gain of 3.8. Now it'll take this information and it will place it into this box over here where it gives me an idea of over this period, how much money have I made on all trades? Let me just exit that. How much I've made on long trades and how much I've made on short trades. You can see here I'm doing better with my long trades than my short trades. It'll give you the batting average at 70%. Now that doesn't mean I'm a master trader. It's just a small sample size. I could lose the next 5 trades and this could go down to 40%. So it gives you really, really valuable information that you can use in the future. I need to become more disciplined with my trading journal. I'm going to, with this YouTube channel, I'm going to start a new trading journal, one trading journal per account. I have 2 accounts. I've got a big boy account. I call it a big boy account, but actually in the larger scheme of things, it's a small account. And then I've got a super baby account, which is this little $300 account. Over to the right, it's also going to give you your cumulative returns over time. So very helpful. This is a position size calculator, but the one online that I showed you earlier is much better. So this is not necessary. But you need a trading journal. In TradingView, you can save your images after your trade so that you can even put what your trade looked like for each win and loss. So let's go ahead and open this one. That's not right. What the hell is that? Give me a sec. There we go. There we go. There we go. Yeah, this was the losing trade. Have a look at this. I saw a resistance over here, and it had tested price had tested resistance 3 times, once, twice, 3 times, and it went straight down, up, and then I thought to myself, oh yes, it's going to test resistance again. And I put in a sell position. As you can see, it just blew through my stop loss, and that was a losing trade, and it took, what was this, on a 15-minute chart. So this took 15 minutes for me to lose this trade. And the reason why this is helpful is because if you have a look here, you can see that I entered the trade too early. I didn't wait for confirmation of the rejection. I took that one candle over there and I put all my eggs into that candle's basket, and it went the opposite way. If I had entered slightly lower, if it came back down, I can't remember where this market went, of course, but if it did reject off here, it may peek through and then come down, and I should have waited for confirmation. That there was a greedy trade. That was, I need to get into this trade quickly because then I can get a very good risk to reward. Because if I waited for it to come down, my risk to reward would have been smaller because my stop loss would have been over here and my entry would have been over here, and that would have eaten away at my profits. Never, ever, 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 ever think about the profits. It's all about the stop loss and the risk management. So in this case, I was trying to gain capital. I was placing that you know, in the forefront of my mind, whereas preserving my capital should have actually been in the forefront of my mind. So this was a mistake, and it's an excellent example of why you need a trading journal. You can see here I had multiple indicators on the chart at that time, all telling me, hell no, buddy, don't put in this trade. And guess what I did? I put it in anyway. So, yeah. That is an example of the trading journal. I'll try and attach it or try and include it in the video or in the description, just so that you have one if you don't already have one. And yeah, you can start using that. The trading journal that I showed you, this one over here, I actually got from my Udemy course. It was one of the resources provided to me by the trainer. And now I've got a whole bunch of them on my desktop, and I'll clean one out. This one, I'll just clear it out, and I will try and attach that for you. Thank you so much. Keep well. Bye.